The next pattern that we're going to learn is called the equal high low formation. This one is really nice and it's really important, and in fact it's very simple. In fact, even simpler than the corrective double bottom. And also in this video we're going to explore what is the actual difference between the corrective double bottom and the equal high low, so that I really make sure that you understand the key difference. So pretty much an equal high low can appear in either already established uptrends, or it can be the first sign for a potential reversal. Okay, and this also perfectly resonates with the trend change formation, which is kind of a market structure shift pattern, which we're going to learn in the next few lectures. But this pattern is really powerful. Okay, and pretty much it consists of a structure break. So you have a confirmed new higher high created, the previous higher high was broken, so you have a structure break, and then pretty much what the market does, it comes to retest the last or the new higher low that was formed after the structure break. So if I actually illustrate this to you, you can see right here that we had a higher high, right? The market pulled back, it created a higher low, and then we just rushed into the highs and we created a new higher high. So we have a structure break. Okay, if I immediately put your knowledge to the test, how would a corrective double bottom look like in this case? Because this is in an already established uptrend. We see that the market is trending. Okay, so pretty much from here the market will push, it will fail to make a new higher high, then it will pull back, maybe fake a little bit, and then it will go from there, and then the structure break is going to be here. Okay, so pretty much we're having another double bottom right there. But with equal high low, you pretty much have the structure break first, the market creates a higher high, and then it comes all the way down towards the higher low. So this is the differentiation. Okay, because sometimes also this is a specific pattern, because most of the times we're going to have a push, pull back, a push, then your higher low of course is right there. But not always the market is going to retest exactly the higher low. Sometimes you're just going to have a pullback 50% and then the market is going to go. Okay, if this is your 50%, the market just stops and it goes. It doesn't retest. But sometimes the market is going to push, pull back, push in again, then start corrective, 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 and it's going to tap all the way down at the higher low. But what do we know is that the higher low is also a strong low. It's also a protected low. So if the institutions actually launch their orders from there, then even if they come in right here, they should not break below. And as you can see from here, usually the market is going to expand and cause a new structure break. Okay. And what you can also have is a combination of both equal high lows and also corrective double bottom. Let's say that you have a push, right? You have a pullback. The market attempts to push higher, it fails, then it actually breaks. Okay, so you have a corrective double bottom right there, but then you have also your new higher low. So then the market can also come in right there, maybe even create a new corrective double bottom and then push in again. Okay, so you have pattern within pattern. So if this is the last higher low, then this is equal higher low right here. But sometimes again, the market is going to try to push, but it's going to fail. It's going to return once, it's going to return twice, and then it's going to go probably on the third time. Okay. So I really hope you're starting to see how we actually put all of those patterns together, and really actually memorizing them is going to help you navigate in the market flawlessly. Of course, this is in a trending market. This example we also have in a reversal market. So imagine right here that we have a downtrend, lower low, lower low is created, and there is the last lower high. So pretty much after the break of the last lower high, we can say that we are currently in a potential trend reversal. Okay. Usually what you would like to see is for the market to break one structure, to pull back, and then to break another structure. So there is first structure break, there is second structure break. After this, you have really a confirmed trend. So please take note of this. You have a confirmed trend, which means like 100% trend after the last lower high is taken in this case, and then potentially the next one is also taken. So you have one break, two breaks. Okay. But as soon as you see this pattern, the break of the last lower high, a nice introduction of buy orders, cause of a structure break, there is your potentially, again, mark my wordings, it's potentially a new strong low. And what the market is going to do most of the times, it's going to pull back all the way down towards this higher low, okay, towards this low, it's going to respect it, and then it's going to cause a new structure break. Okay, and then if from here, you just keep following the market forward again. Okay, so hopefully this makes sense. The difference between equal high low, so there is our equal high low. Okay, it's just an uptrend. The market just comes into retest all the way down towards the last higher low, and then it pumps, and there is our corrective double bottom. It has a corrective double bottom, and then it goes. Okay, so pretty much this push did not make a high, and as you can see, perfectly the difference. This one made a high, this one did not. Okay, so let's have a look at some examples right now. I've prepared some charts for you, and again, we're going to utilize all we know right now. Just while we covered, let's put it into practice. So what we have right here is the market pushing, pulling back nicely, and then from here, from this higher low formation, we caused a beautiful structure break right there. As you can see, the market closed above and stayed above for those 2 candles, so we can definitely say that this high is confirmed. It is nice. Of course, it's a weak high if we're in an uptrend. Okay, so where is our higher low? There it is. It's this, or you can embrace all the wicks right there. Soon you're going to learn also how to draw demand zones. So there is a demand zone within right here. What the market does, it pulls back all the way down. So what is this, guys? There is your first spotted on the charts equal higher low formation. There is your last higher low. There is your higher high. The market does not pull back to 50% and go, but it pulls back all the way down towards the higher low. But we know with structure, we keep trusting it and we keep trading with it until it's wrong, until the major high low is broken. What happens? Again, the market respects the equal high low, tries to push higher, but fails to make a new weak to make a new higher high. Okay, so what happens? It pulls back, and what is this? It's a corrective double bottom within an equal high low formation. So this even further boosts your confidence. You see, okay, equal high low, the market pushes, returns back for more orders. Beautiful. I right now see both a corrective high low and also a corrective double bottom. Okay, what happens later is you can also count this as structure, which is minor structure. Again, this is within this leg. Okay, but we also have this structure. What the market does, after it created the corrective double bottom, it caused the break of this structure. So this right here becomes a higher low. What happens is you drop your higher low formation, which is right there. What is this? A break of structure right there, a pullback towards the higher low, and there is our move. So this one is another equal higher low within the bigger equal higher low. Okay, and we also had a corrective double bottom inside, then another break, equal higher low, and then push. What is also going to help you mark the patterns is just by going onto your charts and marking them either with the path tool, which is just arrows, or just with the drawing tool. So you just start like this: push, pull back, push, pulls back, push, pull back, push, pull back, push, and then you just take the drawing, you move it away, and you actually explore and you actually see how the patterns form. So really, hopefully this one makes sense. It's a great example because we have 3 patterns within just one pattern. And there is actually how you can trade this one. Okay, so form the corrective double bottom. So pretty much this trade right there is on this tap. I think, yeah, it should be on this tap. So what we have is the market first manipulating into the lows. You're going to learn about this concept. This is a range manipulation, and then what we cause the market to change the trend. Why? Where is our last lower high that broke structure? It's this one right there. You can see it's marked with red. Push to the downside, pull back. This is still potentially a lower high. The market tries to push down and fails, and then it actually causes a trend change. So what we said before is that this is the first sign for a potential reversal. Where does the market go? Where is our higher low? There it is. The lowest point right there is our strong low right now. The market perfectly pulls back right there, and look at this beautiful long. Okay, so this is how you can also utilize the equal higher low in order to take trades, and this is pretty much also how you're going to see we're going to trade afterwards. Okay, but this is a perfect example how within this leg right there this is the 4 hourly. If we drop to the 15-minute, you spot exactly the same pattern. Exactly the same pattern. You take the trade. Stop loss, of course, goes below the strong low. You can see it's below this one. You take the trade and then you hit TP. Right? So hopefully the equal higher low is clear. It's very simple yet very powerful information. Right now, let's study the equal lower high.